Is this the start of the end of tax-free savings? The accounts that investors formerly know as stocks and shares ISAs, where you can invest up to £20,000 per year tax-free, may be changing as we know them today. There's been a few articles in the press highlighting it, a couple of you guys have even commented on my recent videos, and earlier on this week I received a rather concerning email from FreeTrade about retail investors being put at risk by HMRC. So let's dig into what we know so far, the problems around it, and what you can potentially do in order to mitigate your risk moving forwards. It all started off back in June with this headline. Tens of thousands of ISA investors could face shock tax bills in shares row. Slightly polarizing title as it always is, but the mainstream media appear to have somehow gotten hold of some information from HMRC around the actual status of fractional shares within a stocks and shares ISA account, and whether they're compliant or not. I have no idea how the debate started or how it was even sparked, but it is something that retail investors must absolutely face into. In the 1988 ISA legislation, it actually states that a stocks and shares ISA may only be made up of single stocks and shares components only. Now, traditionally speaking, a share typically refers to one single unit of ownership, not a fractional piece of ownership. And I control F this whole legislation document, and there's no reference to fractional shares within it, which I guess therein lies the element of subjectivity about what's compliant and what's not. Now, this legislation was written some 35 odd years ago, before fractional shares were perhaps even available to us as retail investors. And as of right now, the taxman is claiming that so-called fractional shares are actually non-compliant with this ISA legislation and should not be allowed to be held within a stocks and shares ISA account. But whilst this is the currently reported stance from HMRC, this is very much a new and evolving situation, where currently there is, as far as I'm aware, absolutely no penalty for holding fractional shares within an ISA account, despite the fact that they're supposedly not permitted. The way I see it is the tax implications, or the tax benefits if you like, are capped at your £20,000 per year ISA limit. What you decide to do with that £20,000 should be entirely up to you. Now, of course, some of the brokers here in the UK that are very popular amongst the retail investing community have been using this kind of fractional shares thing as a big selling point for their platforms, especially the new and perhaps more innovative brokerages that have made investing far more accessible for absolutely everybody. Now, to me, and again, this is just a personal view, but I think it just goes to show just how out of touch the UK government are with perhaps the technical capabilities of these brokerages that are now able to offer fractionalized shares, which were perhaps once commoditized for just institutions, and perhaps just their underlying ability to see any benefit in any kind of change, or at least in the finance space. Which kind of leads me on to talk about some of my real frustrations with how the system works here in this country. I started this YouTube channel for one very simple reason, and that was to simply share the financial education that I taught myself whilst at university to every single person out there who wanted to watch these videos. Because quite frankly, the information and the knowledge that I acquired has pretty much changed my financial well-being. And of course, that's all well and good if you're prepared to go and find the information out for yourself. But that's where the system has a problem, because the education system doesn't teach kids about finance. They're too busy teaching other useless topics rather than something that's fundamentally important for the financial success of individuals within this country. And that's why, in my opinion, talking about money and finances and investments is still very much such a taboo subject. Those who don't understand it think it's only for the rich, but those who do understand it use it to become rich, or at least a little bit more financially better off than what they would have been. And what I like about fractional shares is that it removes that kind of barrier to investing where you need to have money in order to get started. Because by definition, a fractional share is just a slice of one single share that you can look to own. So for example, you don't need to buy one full share in Tesla at $259.67, which perhaps some people might not have to invest come the end of the month. And instead, you could buy just perhaps 0.5 of a share for $128, or perhaps even 0.1 of a share for just $26 if you absolutely wanted to. And you can even go in smaller denominations than that. It allows retail investors that perhaps don't have many hundreds of pounds or many thousands of pounds per month to still gradually build up their investment portfolio, just to give them that opportunity to give them a little bit better of a chance to be financially better off later on in life. And I believe HMRC, with their current views on fractional shares, strip that kind of opportunity away from the little guy. And look, if the UK government and Jeremy Hunt want more people to actively invest in the UK, then what a good way to start by offering fractional shares to the UK public. But the reality is there kind of lacks this overall financial education that we have in the system. And that's probably the reason why we've got £233 billion in cash savings earning 0% interest, despite now being able to get bank accounts that are offering up to 4 and 5%. It just shows how little interest or even perhaps knowledge that people have on their own finances. And that's not really helped by scenarios that we're facing into now, where the UK government are saying actively that they want people to save and invest more, but actually their decisions and actions are only actually enforcing the opposite. But what I will say is at least the brokers are actually working in our, as in the retail investing community's, interests. And I've asked for official comment, but I've not received anything just yet. But what's been reported is that the chief exec of Trading 212 has said that the company has actually taken legal advice and believes that fractional shares are well within the remit of existing ISA regulations. Goes on to say Trading 212 is actively engaging with HM Treasury to review the situation, especially given HMRC's view seems contrary to the government's objectives. And look, I couldn't agree with Trading 212 more, so hopefully the government actually listen and make a good decision for once. So look, enough of my ranting, now let's talk about what you could potentially look to do in order to mitigate your risk, along with potentially protect your overall account value as well. So first off, let's talk about what you need to look out for, and that's Jeremy Hunt's ISA reform plans that he's looking to announce later on next month. And the expectation, at least from FreeTrade, is that they expect that more information will come out on this during the autumn statement. And that could be a perfect opportunity to actually provide some clarity to us as investors as to whether fractional shares are compliant or not. And if there is anything pertinent within that autumn statement that specifically talks about ISAs, then be sure to let me know if you guys want me to make another follow-up video on that when that all comes out. In the meantime, here's what you could do and here's what could happen. Firstly, if you're concerned, I'd probably just round up the fractional shares that you have within your current stocks and shares ISA. Now, of course, that's fine if you're looking at investing into perhaps Apple shares at $170 odd a pop, or at least it's a little bit more achievable, versus perhaps if you've got fractional shares in Class A stock in Berkshire Hathaway, which is the best part of £500,000. But at least psychologically speaking, if you take that step, at least you know that you're compliant with the current ISA regulations as they stand. What I will say though is this might not exclude you from any historical transactions where you've potentially bought fractions of a share, and there may potentially be some tax implications for that moving forwards. But if they do come out in the autumn statement and make some kind of hard and fast rule that any fractional shares that are within a stocks and shares ISA after a certain date are taxable, then at least you've kind of protected yourself from that risk. The other really important thing to call out is that the likes of Trading 212 and other brokers out there that offer fractional shares could also be forced to stop offering fractional shares as a product, which could potentially mean one of two things. First, that they automatically have to sell any fractions of a share that you own within your ISA account, therefore realizing any gains that you've made, requiring you to potentially pay tax. The alternative is that the brokers continue to offer fractional shares as a product, but I guess you could say as some kind of collateral, if you like, they actually buy the full single unit of that share on your behalf, which could be some kind of technical solution in the background maybe, but I guess it could be also seen as a little bit of a loophole, which I'm not too sure would exactly work. Now, of course, this is all largely subjective and all just based on my own personal opinion, but I'm sure Trading 212 and FreeTrade and all of the other brokers out there will keep us updated in due course. Now, it's really important that this video reaches the retail investing community more broadly, so if you wouldn't mind, be sure to drop a like on this video because it will help the YouTube algorithm push this video out to a wider audience. And once you've done that, if you're interested, be sure to watch this video next. And with that being said, see you over in the next one.